Welcome to Trendix, where we break down the latest economic developments shaping the UK and the global markets. In today's video, we're discussing a critical update. The Bank of England is set to cut its growth forecasts, a development that poses a significant challenge for Chancellor Rachel Reeves. What does this mean for the UK economy, businesses, and public finances? Let's unpack the details. The Bank of England is expected to cut its growth forecast for 2024, reducing expectations from 1.5% to just 1%. This adjustment comes after the UK economy stagnated in the latter half of last year. This is a major setback for Chancellor Rachel Reeves, who declared that economic growth would be her top priority. Lower growth projections complicate her efforts to stimulate the economy. In a bid to boost economic activity, Reeves recently announced plans to expand Heathrow Airport. While aimed at stimulating growth, the plan has sparked debate over its timing and potential impact. Since the last election, the UK's economic growth has essentially stalled. Both consumer and business confidence have plummeted, raising concerns about the effectiveness of recent fiscal policies. Reeves's budget introduced a significant £25 billion increase in national insurance contributions for employers. This has placed additional strain on businesses already grappling with economic uncertainty. Major retailers like Tesco and Sainsbury's have announced job cuts, reflecting the broader challenges facing UK businesses in the current climate. Under the leadership of Governor Andrew Bailey, the Bank of England is revising its economic outlook. This move signals concerns about the UK's ability to rebound in the near term. The downgrade raises fears that Reeves may need to introduce additional tax hikes or spending cuts to meet fiscal targets and balance the budget within this parliamentary term. The Office for Budget Responsibility, OBR, is set to release its updated forecasts next month, with expectations that it will revise growth estimates down from 2%. Economists warn that a significant downgrade, combined with rising borrowing costs, could erode the government's slim £10 billion fiscal buffer, limiting Reeves's policy flexibility. There's a potential bright spot. The Bank of England may cut interest rates by 0.25%, bringing the rate down to 4.5%. This could offer some relief to borrowers and businesses. Its analysts at Morgan Stanley predict rates could fall to 3.5% by year-end, while Goldman Sachs suggests they could reach 3.25% by mid-2025. This indicates a possible trend of rate reductions if economic conditions remain weak. However, not everyone agrees. Many traders believe there will be no more than 3 rate cuts this year, especially with inflation still hovering above the bank's 2% target. Despite the gloomy outlook, experts believe the bank is unlikely to implement a drastic 0.5% rate cut in one move. Such an aggressive step could signal deep economic pessimism, which policymakers are keen to avoid. The UK faces a challenging economic landscape, slowing growth, fiscal pressures, and an uncertain path for interest rates. The coming months will be critical, as both the government and the Bank of England navigate these turbulent waters.